Hello dear fellows, we are here to introduce about loan. What is a loan and how can we take loan? Who is eligible for loans and what is the term and conditions? Now starting our videos. What is loan? A term loan refers to types of the credit bills in which a sum of money is lent to another party in exchange for future repayment of values or principal amount. In many cases, the lender also adds interest or finance charges to the principal values which the borrower must repay in addition to the principal balance. Loans may be specific, one-time amount, or they may be available such as open-ended lines of credit up to on a specific limits. Loans came in many different forms including secured, unsecured, commercial and personal loan. And we are taking about some key takeaways. A loan is when money is given to another party in exchange of repayments of the loan principal's amount plus interest. Lender will consider a prospective borrower plus interest and borrow income, credit score and debit levels before deciding to offer them a loan. A loan may be secured by collateral such as a mortgage, or it may be unsecured or such as a credit card. A credit card may be secure or mortgage is may be risk, and a revolving loan or lines can be spent, repaid and spent again, and while term loans are fixed rates, fixed payment, and maybe sometime it's risk. And a lender may be highest interest rate at a risky borrowers. And a loan is a form of debt incurred by a individual or other entity. The lender, usually a corporation, financial institution or government, advances a sum of money to the borrower in return, and financial institutions or government and money to the borrower. In return, the borrower agrees to the certain set of terms including any financial charges and interest repayment date and other conditions. In some cases, the lender may require to secure the loan to ensure repayments. Loan may also take the form of bonds and certificates of deposits. It's also possible to take a loan from 4K12 account. The loan process. Here is the loan process works. When someone needs money, they apply for a loan from a bank, corporation, government and other entity. The borrowers may be required to provide specific details such as the reasons for the loans, their financial history, social security number and other information. The lender reviews this information as well as a person debit income ratio to determine if the value can be paid back. Based on the applicant, the lender either denies or approves the applications. The lender must provide a reason should the loan applications be denied, and if the applications is approved, both parties sign a contract that outlines the details of the agreements. The lender advance the proceeds of the loan, after which the borrower must repay the amount including any additional charges such as interest. And the term of a loan are agreed to by each party before any money or property change hands on it distribute. If the lender requires collateral, the lender outline this is a loan documents. Most loan also have provision recording the maximum amount of interest in addition to the convent. Here are a few components of a loan. There are several important terms that determine the size of a loan and how quickly and borrow can be paid. And it have some components like principal. This is the original amount of a money that is being borrowed. Loan term, the amount of a time that a borrower has to repay the loan. Interest rate, and the rate at which the amount of money on increase, usually expressed in term of a APR. Loan payments, the amount of loan payments must be paid every month. And my video has been completed. Thank you.